Banks are taking a hit in the pre-market here and in Europe. New documents, we just talked about, detailing trillions of dollars of transactions that the banks flagged as suspicious. Joining us now, Jeff Harte, principal at Piper Sandler. You think that this whole anti-money laundering saga, you say it feels more like an excuse than a driver, and it comes after the banks outperformed last week, Jeff?
Yeah, especially looking at the U.S. banks, like a J.P. Morgan, down in the pre-market. I mean, the market's down. They're high beta. I get it. Last week, the banks did outperform, so you could see a little bit of profit taking there. And I think what people are increasingly doing with the banks is looking beyond credit, right? We know the COVID credit situation, but once we get through that, what does the environment look like? And it looks pretty tough. There's not a lot of loan growth, and there's limited, the interest rate environment's not very friendly. So that the 10-year kind of yield ticking down again this morning really doesn't help much. But I really think, looking at some of the AML headlines is a reason for the decline here. I think it's more, the nail trying to find a hammer as opposed to the hammer finding a nail. These headlines always create some dislocation. And, even if there is something there, though, I mean, these things take years to play out. So it tends to be a long time before you really get kind of any answers on it. So I think that what we're probably more likely seeing here is banks kind of hitting the lower end of their recent trading range. It's going to be tougher to break out of that trading range till things look better, as far as the outlook becomes a little more clear. To give you something good, though, I do think when you look at a J.P. Morgan or a B of A down today, it's a buying opportunity because scale yields now more than ever in banking, and these are the type of players who really have it. So you got to be a little bit of a selective investor, I think, a stock picker at banks, but I think the J.P. Morgans and B of A's of the world are the place to be.
So when we get through COVID, the other side, and what's obviously what's happening in Europe, not the AML stuff, but the COVID stuff is casting a pall on the entire market. But even if we do get through that, you say that there's still reason for concern just in terms of profitability for the banks, the yield curve and loan growth. So that you think we're near the low end of the range. So the sell-off is petering out this week. You think then the banks resume more positive trading, or they're going to look through to see that it's not going to be great after COVID?
I think that the giving up some of the recent gains makes some sense. When you start looking into next year, I mean, pretty much incrementally, all we're getting is good news on credit. While that could change, I mean, that's been one of the big concerns, and that seems to be fading a bit. But that does leave investors to look and say, okay, once we get past credit, how does profitability look? And it's not that profitability looks bad. It's just hard to pencil in a lot of, ex-credit profitability improvement when you're looking at a really flat yield curve, really short, low interim rates that probably aren't going to get a lot better. And we're not seeing much loan growth at all. So, I mean, I would say it's a pretty uneventful or maybe neutral outlook once we get past credit for the banks in general. So not that banks can't go up from here, and probably I think will go up from here, but it becomes a picker's market, right? And certain banks are going to do much better next year than kind of banks in general.